Technical analysis is a trader's map and compass, using past price and volume to forecast future moves. Instead of guessing based on news or gut feelings, traders read charts to understand the ongoing battle between buyers and sellers. This approach helps identify trends, spot turning points, and manage risk with clarity. The key idea: all known information is already reflected in a stock's price, so price action is the most direct thing to study. For short-term trading, charts provide the most immediate feedback and insight into market psychology. In this video, I'll introduce two powerful tools: multiple time frame analysis, the anchored volume weighted average price, or AVWAP. We'll see how analyzing a stock from different time frames gives context, and how AVWAP reveals the true average price paid by participants. By combining these, you can develop a robust trading plan identifying key support and resistance, timing entries and exits, and managing risk. The goal: a clear, repeatable process for analyzing charts and trading with confidence. Using multiple time frames is like examining the market with both a telescope and a microscope. The daily chart shows the long-term trend, your strategic direction. If a stock is in a strong uptrend on the daily, look for buying opportunities, not shorts. But the daily chart doesn't show the best entry point. That's where shorter time frames come in: 60-minute chart, 15-minute chart. These reveal smaller patterns and pullbacks, potential low-risk entries. The real power is when all timeframes align, called timeframe continuity. If the daily, hourly, and 15-minute charts all point up, daily, hourly, 15-minute, your odds of success increase. If they disagree, it's a signal to wait. Think of it like planning a road trip. Your long-term map sets the direction, but you need short-term details to navigate each turn. Use the long-term chart for direction, the medium-term for setups, and the short-term for precise entries and exits. This systematic approach filters out noise and focuses you on the highest quality trades. The volume-weighted average price, or VWAP, is a crucial indicator that shows the average price paid weighted by volume. Unlike a simple moving average, VWAP reflects where the real money was committed. The anchored VWAP, or AVWAP, lets you start the calculation from any significant point like a major low, a major high, a news event. This custom anchor reveals the average price paid since that moment, turning VWAP into a dynamic support or resistance level. If price is above an AVWAP anchored to a recent low, most participants are in profit, creating support. If price is below an AVWAP from a recent high, it creates resistance. Learning to anchor VWAP at key moments gives you a clear, objective line for risk and opportunity. Combining multiple time frame analysis with anchored VWAP creates a trading system greater than the sum of its parts. Start with the daily chart to determine the trend anchor of VWAP to the most recent significant low. As long as price stays above this AVWAP, your bullish thesis holds. Next, zoom into a shorter time frame, the 60-minute chart, anchor a VWAP to a recent high. Watch how price interacts with both AVWAPs. A high probability entry occurs when price tests the long-term AVWAP, finds support, and reclaims the short-term AVWAP. This method gives you a clear, objective framework, no more guessing where support might be. The long-term chart tells you which side to be on. The AVWAPs define your risk and entry. This combination of strategic overview and tactical precision is what separates consistent traders from the crowd. Use it to time your trades with confidence. Let's walk through a hypothetical trade using these concepts. Step 1. Find a stock in a clear uptrend on the daily chart. Let's call it XYZ, showing XYZ on the daily. Step 2. Anchor a VWAP to the most recent major low on the daily chart. As long as price stays above this VWAP, the uptrend is healthy. Zoom into a shorter time frame, like the 15-minute chart. Watch for a pullback toward the long-term VWAP. Wait for signs of selling pressure easing and price reclaiming a short-term VWAP. Step 4. Enter a long position once price holds above both VWAPs. Place your stop loss just below the recent low or just below the long-term VWAP. Set your profit target at the previous high or use a measured move to set the target. By following these steps, you confirm the trend, pinpoint a high probability entry, and define your risk. This is how you turn analysis into action. To master technical analysis, focus on its three pillars: price, time, volume. Price shows the battle between buyers and sellers. Time frames the action. Volume reveals conviction. Multiple time frame analysis uses time to give perspective on price behavior. Volume confirms the strength of moves. High volume means strong conviction. Low volume means weak moves. The anchored VWAP combines all three: its price, weighted by volume, over a specific period you define. VWAP isn't just a line, it's the market's true center of gravity. By using VWAP, you see how price, time, and volume interact in real time. This gives you a powerful objective edge. To succeed with this strategy, follow these best practices. Always start with the longer time frame to establish the dominant trend. Never trade off a short-term chart without understanding the bigger picture. Be selective with your VWAP anchor points. Choose moments that truly shift market psychology, like major highs, lows, news events. Don't clutter your chart with unnecessary lines. Patience is key. Wait for confirmation on the short-term chart before entering. Let price reclaim a key VWAP before you act. Practice strict risk management. Always know your stop loss and position size before entering a trade. Losses are part of trading. Your job is to protect your capital and let your edge play out over time. Discipline, consistency are what separate successful traders from the rest. Stick to your process and your results will follow. Common mistakes can derail your progress. Don't ignore the long-term trend. Never fight the tape. Always check the daily and weekly charts before trading. Don't use VWAP blindly. It's not a magic line. Watch how price behaves at VWAP. Look for confirmation, not just a touch. Avoid overcomplicating your charts with too many indicators or VWAPs. Simplicity and clarity are your allies. Never trade without a stop loss or a clear exit plan. Hope is not a strategy. Define your risk before you enter. Stick to the basics trend. Stick to the basics key VWAPs. Stick to the basics confirmation. Protect your capital above all else. Avoiding these mistakes is as important as following the strategy. In summary, combining multiple time frame analysis with anchored VWAP gives you a robust, logical trading framework. Start with the big picture, align with the dominant trend, use VWAP for precise entries, use VWAP for exits. These tools turn subjective guesswork into a data-driven process. Success requires discipline. Always start with the long-term chart, choose meaningful anchor points, wait for confirmation, and manage risk rigorously. Avoid common pitfalls: fighting the trend, misusing VWAP, overcomplicating charts, or skipping stop losses. Trading is a marathon, not a sprint. Use these concepts as your map and compass. Practice on historical charts with paper trading to build confidence. Study your successes and failures to refine your edge. Over time, you'll develop the intuition and discipline needed for consistent, confident, and profitable trading.